The first thing to say is that it looks like prices are still going up, but the asterisk to that, the caveat to that is that they're going up in a very different way to how they were going up, say, 12 or 18 months ago. For most of 2013, 2014, prices were going up because they were going up in Dublin, and they weren't really going up in most other parts of the country. If anything, that's flipped around now. Prices are going up slightly in Dublin over the last 3 months, but really the big areas of price growth now are outside the capital. To a certain extent in the commuter counties, places like Meath and Kildare have seen big increases in the last 3 to 6 months. But even when you look at Munster and Connacht and Ulster, prices there now are going up quite a bit, whereas they would have been static even into this time last year. For the last, I suppose, 9 to 12 months, the market has been in a bit of a state of flux because last September, as far as anyone was concerned, nobody was introducing any mortgage caps anytime soon, and then almost overnight the central bank announced that it was going to cap mortgages based on savings and incomes. The first thing we saw was a big pullback in expectations about what was going to happen in prices in the future. And of course, if people don't think prices are going to go up by 10 or 15% every year because their incomes aren't going up by 10 or 15%, that's going to take some of the heat out of the market. And we saw that in the last 3 months of 2014. Prices fell pretty much across the country in the last 3 months. In the first 3 months of 2015, once the central bank announced what it was going to do, and it was a bit more relaxed than their initial suggestion, it wasn't a 20% deposit for everyone. What we've seen is really the people who got approval, mortgage approval in the last couple of months of 2014, they've been driving the market. They were driving the market certainly in February, March, April, and there was a big increase again, including in Dublin. But in the last 3 months, as we've run out of people who have the mortgage approval under the old system, a lot of the heat has been taken out of particularly the top end of the market. So if you compare prices now in, say, the top 5 most expensive markets in the country are Dublin 4, Dublin 6, Dublin 6W, Dublin 14 and South County Dublin. And if you look at those 5 markets, prices now in June, July are pretty much the same as where they were last September before the central bank made any announcements. Whereas if you look at places like Meath and Kildare, prices are up by maybe 10 or 15% in the same period. So it's taken the sting out of the very top end of the market. The single biggest mistake we made in the run up to 2007 was not capping how much people could borrow relative to their savings or relative to their incomes. So certainly this is the foundation of a good housing market policy, but it's not the only step you need to take, and it won't solve the problems of a lack of supply. So the central bank has done its bit. We now need the Department of the Environment, the Department of Finance, the Department of Taoiseach to do their bit as well in terms of making sure we have a fully functioning housing market. We know we're not going to have another credit bubble, but that doesn't mean we're going to get enough housing supply over the next few years. One of the few reservations I would have, I think, about the central bank rules. Overall, it's much better to have them than to not have them, because it does rule out another credit bubble. The concern I have is about the loan to income multiple. So house prices vary hugely across the country. If you're even thinking about a 3-bed semi-D, you could be talking the most expensive to the least expensive areas of the country could be a factor of 5, maybe even 10 between the cheapest and the dearest. Incomes don't vary by anything like that. If you take first-time buyers around the country, those in Dublin will have slightly higher incomes than those in Cork and Galway, and they might have slightly higher incomes than those elsewhere. But a teacher's wage or a standard administrator's wage in a private sector office, I mean, they don't vary by a factor of 10 if you're working in Dublin. So one of the knock-on effects we're going to see from the central bank rules is, so you might call a reshuffling of demand, and that demand is going to move from Dublin to places that are cheaper relative to their incomes. Some of that's going to be to the commuter counties, or if you can, some of it's going to be to Cork and Galway if the jobs are there. So I think that's one of the knock-on effects. Clearly it's not sustainable to have 15% increases anywhere in house prices, and that's perhaps another thing we've learned from looking back at the bubble to 2007. So hopefully we will see the central bank rules kick in, the effect of them kick in places like Cork and Galway soon, because it's not a target, it's a limit. So it doesn't have to be that house prices are a certain multiple of incomes everywhere.